today we're going to be taking dividends that we're sending out from our stocks or to our stockholders and figuring out how to account for that in our accounting books. So let's take a look. Okay, so here we have our first practice sheet that I'll be doing for you. We have on January 20th, Company A declaring a yearly cash dividend of $4 per share. So they're going to send out cash from our retained earnings out to the shareholders. And we're doing $4 per share. So everybody who owns a share gets $4. If you own multiple shares, it's $4 per share. Paid quarterly on 2,500 shares. Okay, so I just want to take 5 seconds to think about this. How much is the annual dividend per share? Well, it's $4 a year, right? So we're doing $4 for the year. But we're paying this quarterly, which means every 3 months. That's 3 times 4 is 12. So quarterly would be every 3 months. Every 3 months we're paying a piece of that. So what we do is we take $4 and divide it by 4. They can't handle the dollar sign. I always thought so. It was worth a try. Okay, so $4 divided by the 4 payments is $1 every payment. So, whoops. Now we'll change this into dollars and get rid of the decimal. So that's good to know. Okay, let's go back up. So we're paying this quarterly on 2,500 shares. It's quite a bit. Of the preferred stockholders are guaranteed dividends outstanding to stockholders as of record as of February 11th, payable on March 2nd. Okay, so the first payment is going to go out on March 2nd. This memo went out on February 11th, and now they're going to be paid on March the 2nd, the first one. So the announcement is recorded in Minute Book, page 380. Check number 4331 for $2,500 is issued on March 2nd. Okay, well, how did we come up with this $2,500 mark? Well, remember, there's 2,500 shares, and we're paying $1 every quarter, right? We're paying $1 every quarter. So 2,500 shares times $1 is $2,500. Okay, so that's how we came up with the math. Cool. Okay, so this was issued on February 11th. Let's get this started. February 11th. Okay, and what did we do? Well, we promised to pay dividends. So, dividends of my preferred stocks. That's going to be my pretty much an asset type account, and we're going to keep track of what we've promised pretty much right here. Okay, so we've promised to pay $4. I'm going to do some math here. Equals $4 times 2,500 shares. So the total amount we owe is $10,000. Okay, cool. All right. So now what's the credit? That was the debit. What's the credit? And probably the liability here. Oh, 1, 2, 3, 4. That's dividends payable from our preferred account. This is the owe. This is what I owe somebody, right? So I owe them a credit of $10,000. So at the end of a full year, we got March 2nd, then we got 3 more payments. At the end of the year, we'll have paid $10,000. That's what we owe them. Okay, and where did we get this information? This came from Minute Book, page 380. Now, the Minute Book is probably just referencing a meeting book where people got together and they decided this and they put it down in what they call the minutes. Okay, sweet. Okay, we did the general journal, but we haven't done the charts down here so that we can keep things balanced. So let's do that real quick. So this was a debit in our account. So we got $10,000. But there's also an owed side, and we owe them. So we made the promise, now we owe them, it's balanced. Perfect. Now, the next transaction was on March 2nd. On March 2nd. And this is where we actually paid the first payment. Remember, the first payment is $1. The whole thing's $4, but if we do it every 3 months quarterly, then we divide that up, we got $1. So we're going to be paying $2,500 on March 2nd out to everybody. Well, everybody gets a piece of that. Okay, so now my dividends payable, the owed amount is going to fall. It was a credit, so now we're going to debit it to bring it down. So we're going to bring it down $2,500. Ooh, what's that? Perfect. Okay, so now we're taking that bill down. What we owe them has come down, but where's the money coming from? Well, the cash in bank. So we've got to make sure we put $2,500 there so that the cash in bank decreases. And now it's balanced. Oh, I forgot to mark the payable. So now it's balanced. So let's put the cash in the bank. Cash in bank, 2,500. It's balanced. Balanced here. We lost some cash, but now the bill has gone down. So actually here in a second, what I'm going to do is I'm going to go ahead and figure out what the balance is now. But we'll do that in a second. Okay, let's go ahead and record this. And this was check number 4331. And that was issued March 2nd. Sweet. Okay, so that's it. The only thing left to do is I'd like to have a little balance here to see what's still owed. So this was the balance as of March 2nd. And we're going to take that 10,000. So this equals 10,000 minus this 2,500, 7,500. So, sweet. So that's our first one. Now, this one, let's take a look at it and we'll have you answer some questions. On January 20th, Company A declared a yearly cash dividend of $6 per share. Okay, so throughout the year, you'll get $6 for every share. But we're paying quarterly, of course, on 1,000 shares. So that means that we're not going to actually give $6 every payment. We got to divide it up. So let's see how much that would be. How much is the dividend per share? Well, it's $6. So $6 for, overall. But quarterly, how much is it? So we got to do some math. So this equals $6 for the year, but we're doing it 4 times. So we divide it by 4, and we get 1.5. So that would be $1.50, okay, every quarter. Okay, so we're getting $6 per share paid quarterly on 1,000 shares of the preferred stock outstanding to stockholders of record as of February 11th. So on February 11th, boom, we made this decision. We're going to see who's a preferred stockholder at that time, and then we're going to start making a list, and then those people are going to get their first payment on March 2nd of $1.50 per stock. The announcement is recorded in Minute Book, page 250. Check number 8711 for $1,500 is issued on March 2nd. Okay, so let's do some work here. So we recorded this on February 11th. All right, and we have an account in the assets section called Dividends Preferred. So we're taking some money and we're setting it aside for people who have preferred stock to give them this dividend. So this would be a debit of, let's see, it's going to be $6 times 1,000 shares. So this equals $6 times 1,000 shares. That's a total of 6,000. Okay. Now we also owe that to somebody though. That's a liability. So we have dividends payable on preferred. So we're going to keep it balanced, put that in the credit section. Everything's balanced here. Let's make sure we keep track of where this came from. That would be Minute Book, page 250. Okay, so let's keep track of that in my charts down here. We got dividends preferred. We now have $6,000 that we have promised, And so that means we owe $6,000. Perfect. Okay, so now we got to issue that first check. So on March 2nd, when that comes around, we're going to send out some cash, pay people for the preferred stock. So we're paying $1.50 per share. So our dividends payable, our bill, what we owe, is going to go down on a debit for, let's do some math, $1.50. And there's 1,000 shares to pay. So that's $1,500. That's going to decrease my cash. Can't keep money in, pay the bills. All right, so $1,500. And then this comes from check number 8711. Okay, so check number 8711, and we are good to go there. We just need to record this in the T-charts. So I lost money. Let's record that first. That's not hard to forget. $1,500, but it's being taken out of what we owe, the payable, and we're just going to go ahead and put a balance here. On March 2nd, and that balance would be 6,000 minus 1,500, 4,500. So we still owe 4,500 for the rest of the year's payment. Awesome. That's it, guys. You have one more to go down here called final practice. It looks like this. If you have any questions, just let me know. I'll be happy to answer them. You can use the chat feature, email feature. If you're in class, you can always ask. But if not, then see you next time.